What is happening? This is Colin Andrews Egbert. Have a special guest with us today here on Buying Beautiful, Boring Businesses. And somebody that has seen a lot, hundreds of these boring businesses. We have Glenn Giro on, and he is the Senior Vice President for T Bank, which is very, very active in the small and medium business acquisition space. And so very excited to have him on. He's got some things to share with us today. And if you're looking at this, you're either considering buying a business, or most likely you're looking at investing as a minority limited partner into a business. And Glenn and the lenders that are out there not only provide the funding, but they are a really good sounding board. They're because of their unique position, they're seeing dozens and dozens of deals every quarter, and allows them to really have a great perspective that a lot of folks that if they're doing their first business or, have just done a few of them, they don't have the type of experience that he has. So besides providing the lending, they really give that additional due diligence that you might not necessarily get if you didn't have them involved. So Glenn, great to have you on.
Yeah, appreciate you having me. You mentioned they're boring. They're all exciting to me, Colin. So
there you go.
Excited to be here. Thanks for having me.
Awesome. Excellent. So really, I'd like to just kind of give you the baton, so to say, and please kind of share a little bit more about, what you do, how you help both investors as well as also the owner operators take the next step with acquisitions.
So kind of what you said. So I specialize in SBA, specifically the 7A lending program, which has, a dozen different uses, but I hyper focus on business acquisition financing. That is my bread and butter. That is what I do kind of all day, every day. It also happens to be my favorite transaction. And so one thing I always like to tell people with a 7A loan is that there's always two things at play. There is obviously following the rules that the SBA, the actual government agency, sets forth. Those rules are fluid, right? We just went through some major rule changes back in June. So it's kind of my job to obviously keep up with the rules and make sure that I'm advising people correctly based on those rule sets. So that's always one kind of thing that's going on. And the other is just understanding your own bank's credit policy and preferences, right? I work at T Bank. There's things I know that we like that potentially some other banks might not like, and vice versa, right? Things that we kind of stay away from that other banks may love. And so one of the things that I try to always do up front is really educate on both of those pieces, right? What makes a strong deal and also eligible for SBA guidelines, and then what is going to be something that we like, that T Bank's going to like, and something that I feel confident that we're going to get approved, because I'm not an application taker, right? I'm not just throwing in apps hoping things stick. I get into the deals. I like to read the numbers, get the story not only from the business but also from the buyers as well, and make sure it's a good fit. And so obviously we'll be talking about what kind of is a good fit, I'm sure, during this call.
Excellent. All right. So yeah, feel free to share your screen and let's jump into it.
Make sure it pops up for you.
Yep, we see it. Okay.
Yeah. So this is a presentation that we like to say becoming bankable, right? Like, presenting an opportunity, an acquisition opportunity that is going to be liked by a bank, right? By an SBA lender. And kind of like I mentioned, there's a lot of things that go into it. This is not these SBA loans can be complex. There's a lot of kind of layers to them. So kind of navigating them is important. And kind of step one, as somebody who's looking to buy a business or potentially be an investor with somebody on a business, is and it's understanding what a bank is looking for, right? And so we'll definitely focus kind of on those things. Kind of what you mentioned, here's just a kind of a quick bio about me. I've been in banking since 2008, been doing SBA lending for a decade plus now. And like I said, it's super important to work with somebody who's kind of in it all day, every day. And you kind of see my colleague, Audrey, as well. We're both kind of involved in multiple kind of business acquisition groups, right? Groups of people that get together for the purpose of kind of partnering and helping people buy business, whether you're an investor or whether you're going to be the owner operator. We kind of work with all parties. And another kind of thing I'll shamelessly plug is I do have a YouTube channel called SBA University, where I kind of just put out content, right? Educational things. That way people can truly kind of just understand a lot of things I'll be talking about. I cover these things on my YouTube channel. So shameless plug there.
Good.
All right. So just kind of a quick introduction on T Bank. We're a Texas-based bank, actually the number one Texas-based SBA lender. So for kind of SBA lenders that where you're headquartered in Texas, we're number one, which just, I just think kind of shows for a bank that probably not many people have heard of, we're dedicated to lending. And that's not just Texas-based lending. That is nationwide lending. So I'm actually based in Nashville, Tennessee. I've got deals all over the country. But we're a bank that is built for SBA lending. So, and that's important, right? It takes a lot of people to make this department work. One thing that's nice about our size, because we're not obviously one of the mega SBA lenders. I like to think that the advantage of kind of being a little bit smaller is we can really streamline the process, right? I can get deals looked at quickly. I get into underwriting. The underwriter can pick up the file really quickly, kind of get that back and forth. The nature of just a loan, right? Can take some time, especially with SBA lending. So the idea is, hey, if we can speed this process up, we have the ability to do it because we're not kind of getting bottlenecked with overflow of deals because we have 50 BDOs like myself just jamming deals in. So great group of people, super knowledgeable, and we can usually be pretty fast because we kind of manage our pipelines and things like that, and primarily trying to only put in deals that we think that are strong, right? So that's a big part of it as well. All right, so a couple big things. What does bankable mean, right? On the very kind of highest level, I always tell people the SBA 7A loan program, it's a cash flow loan program, right? Can the business that you're buying support the debt that you're about to take out to buy it? I mean, it makes too much sense, right? We're not going to give you a loan to buy a business that's struggling, that potentially is losing money. There's no turnaround projects in our world, right? You can't come with me and say, hey, I know the business is doing bad, but I have all these great ideas and I can turn this thing around. The business has to demonstrate it can cash flow. And then obviously from your personal profile also kind of comes into that, right? What's your income? What's your debts? Because obviously, there's kind of two things that are usually at play from a buying standpoint. Is either A, I'm going to quit my job and run this thing full time. Well, great. Well, we have to kind of figure out what your salary needs to be, right? You're going to have to start paying yourself. So we got to make that adjustment. If you're pretty light on debt and you have a low cost living, great. We're probably not going to assign you a big salary. Whereas the reverse, you got multiple houses, you got multiple, car notes, got some credit card debt. We're going to look at that in reverse. We're going to have to potentially take a lot of cash flow out of the business so you can make enough money to pay your bills. So personally and business cash flow. It goes without saying credit, right? I mean, you apply for anything, we're going to analyze your credit. You have to have a solid credit, repayment history. These things are obviously really important. Then obviously from a character standpoint, those are the things that are, not pulling up on financial statements, right? We're going to look at your resume, your bio. Do you have relevant experience? From a household standpoint, do you have a spouse? Are they going to guarantee? One of the things that we can do to mitigate our risk is just obviously it's ask the easy question: is this person the right fit for this business? Do they have the background that's going to help them be successful? While you don't have to have direct industry experience, part of what we're going to look for is essentially, do you have applicable management experience? And that's super important when we're looking at, $2, $3, $4 million, SBA loan deals, making sure we have the right buyer group in place to be successful.
Absolutely. And Glenn, can you kind of share a little bit on the June 1st changes and how that affected the overall, the credit requirements, the equity, some of those different things? Because a lot of folks, and I'm sure you as well, when you first heard about it, like, wow, it's not just a few small things. Like they really made some pretty dramatic changes June 1st. And really one of the reasons why we've created our matchmaking partnership program is because of those changes.
Yeah, a lot of it gears around seller participation, right? The old rule was the seller could help finance up, these loans require at least 10% minimum equity injection. That's the total project cost, right? So that's buying the business, working capital, and the fees involved. You add all those up, 10% is the required down payment, essentially. Under the old rule, the seller could actually finance the entire 10%, and that would only need to be on standby for 2 years. So you could technically buy a business for no money down. The seller finances it, waits 2 years, and then they can start making payments, right? That was technically eligible under the old rule. What the new rule says is now the buyer has to come in with at least 5% of that 10%. Okay, so that's not terrible. But now that 5% seller's note that's being used to get to that 10%, now that has to be on standby for the life of the loan. So no payments for 10 years. And when you've got somebody that's retiring, usually in their 70s, they don't want to wait 10 years to get paid back, right? And so what you have now is sellers are less willing to participate in the equity injection part of the transaction, right? So you're having to find more qualified, essentially more qualified buyers. So from that standpoint, that's kind of changed it, right? So you have to have buyers that are able to come out with potentially the 10%. So obviously that was a big one. Another thing that obviously that's changed a little bit is a lot of think about your HVAC companies, your plumbing, these companies where the owner, that they have to have a license involved. Historically, they were okay with the kind of maybe an employee or maybe the outgoing owner, holding that license for a little bit. I've kind of gotten the sense that they're becoming more strict on that, right? If you're going to have a HVAC company, most lenders are now want that license to be tied into the ownership of the business. Now it can be minority ownership, 1%. They don't have to guarantee, but the idea is you've got that license holder locked in. So that's also super important to have kind of that person involved in the transaction. So, those are some of the big changes, the requirement for the buyer to come in with the equity injection, now the standby for the full 10 years. And businesses like licensed businesses, they want that license holder to be part of that ownership group, even if they're not even going to guarantee on the loan. They want that to be part of the deal.
Got it. And besides the credit and the equity injection, also no folks that are outside of the U.S. too. They have to be a U.S. resident or
correct
citizen. Is that correct? They can.
That is correct. Yep.
Okay.
Legal. Yeah. U.S. citizen, legal permanent resident, kind of permanent, green card holder. Right. And that has to be the entire ownership table. It used to, majority ownership, U.S. citizen, 50, you could essentially buy a business with 51% owner from the U.S. and, 49 from, non-U.S. citizen, right? 100%. The ownership has to be U.S. citizen, legal permanent. All right. So the timeline. So obviously everybody wants to know, how long are these loans going to take? And we kind of break up this process, let's say kind of into 4 steps, right? Step 1, let's collect the financials from the potential buyer, from the business, and we're going to do, the exercise, right? What's the cash flow the business is putting out? Let's bring in the buyer. Let's see how their profile potentially impacts the cash flow. But it's kind of just truly understanding, do we like the deal? Do you like the deal as a buyer? Do we like the deal as a potential bank? The answer to that is yes. Number 2 is issue a term sheet, right? Okay, here's the terms, the working capital we're going to build in, here's the rates. And hopefully, that's potentially going to match what what they've agreed to. And then at that point, everybody's agreed to that. Then we collect the full financial package. So collecting from the business, collecting the remaining items from the personal, and get that thing into underwriting. One thing I like to say about T-Bank is our underwriters talk to the buyers, right? I think it's super important that the underwriter has the opportunity, if they've got questions about the deal, just ask the person directly, why are you buying this business? I see this, is this going to be an issue? To me, a lot of banks kind of put a wall up with their underwriters, and there's such a difference, I think, that happens when there's a personal connection there. So I really like that about T-Bank. But essentially the underwriters going in and doing that super deep dive and kind of making sure that all the information that I provided, the numbers that I crunch, kind of match what they have as well. And ultimately an approval, right? So they come back, deal looks good. We get you a commitment letter. That commitment letter hopefully matches basically the term sheet. Here's the rates, here's the terms, kind of an unofficial list of conditions to close. You as the buyer, you review that. If everything looks good, you sign that commitment letter and you get it back to us. At that point, we have a closer gets assigned to the deal, and that closer's job is to collect everything that is needed to close on that loan. So whether it's SBA eligibility stuff, due diligence stuff. So think making sure your insurance stuff is in place, life insurance, for these deals now, the SBA does talking about changes. Any shortfall of collateral, you're going to have to get the owners are going to have to get a life insurance policy. So that's something you want to start at step 1, right? Because, I've got a deal where, it's a $4 million loan, barely any collateral. They need to get a $4 million life insurance policy. That takes, that can take some time. So doing all that, like I said, making sure there's final count if there's inventories or AR. Usually the purchase agreement might get edited a few times once the attorneys get involved. So, kind of collecting everything to get to closing. And you can kind of see the timeline there, 45 to 60 days. Usually the delays are things out of our control. I mentioned like the life insurance. We're asking for documents, they're just not ready, or, they're still going back and forth. Normally if things, we're asking for something, you're getting it to us, we can hit that 45 to 60. If there's just delays in getting information, obviously it can extend further than that. But the idea is that these are kind of the 4 parts of the process, and hopefully we can hit that average timeline of 45 to 60 days.
Excellent.
All right. So red flags, right? So what are the things to kind of look out for? The one things that, these are kind of things that I kind of immediately look at as I'm reviewing deals, right? So number 1 is the overpriced deal, right? We kind of like to be in that 3 to 4 times multiple of kind of cash flow. And so when you start seeing a deal that's priced to 6x, 7x, that's just a warning sign that, maybe it's worth it to somebody, But for an SBA loan, this is going to be a challenge. So just making sure that it's priced somewhat appropriately. And sometimes where you see deals get into trouble is tons of personal expense add backs, right? The classic case of the business owner who paid for everything on their personal through the business, right? And they want to add all that back and then multiply that times 4. It just throws the valuation off because we're not going to give those add backs to them. I mean, it's case by case, but like if you decided to milk your business for your personal life, this is where it's going to come and hurt you, right? So, obviously, number 2, erratic or declining business financials. I'm big on trends, right? We look at 3 years historical plus year to dates. We want to see, has business gone up? Has it gone down? Obviously, declining revenue trends are always going to be a red flag. Again, going back to the idea that, hey, you're not being brought in to save a failing business. You should be getting a healthy, thriving business to make this thing work. Customer concentration, self-explanatory. If you have one customer that makes up 25 plus, 30, 40 plus % of the customers, we're really going to want to dig in on that. It's not a deal breaker, but again, it's a red flag. Lack of relevant experience, that one is, like I say, we obviously love direct industry experience. You have to convince us that you've got the experience to run this business, right? That's why sometimes somebody gets into this highly specialized business, they know nothing about it. It's a red flag because again, you're walking into a company that has employees, and if they find out that you know nothing about this business, again, it's just, they might, it might just look poorly on you, right? Because you can't really help. Significant owner add backs, we talked about that. And then licensing issues, franchise, again, just making sure that you're properly structured so that you're not going to run any of those issues at closing.
Excellent. On the owner add backs, if they're taking a larger salary for themselves than what would normally be acceptable, or what would normally be provided to somebody that would take their role, how much or what kind of flexibility do you have with the add backs? Are you saying, hey, we'll give you credit for X percentage? How does that look when you're analyzing it?
Yeah, owner salary add back's easy, right? The owners took $500,000 in salary. Based on your living expenses, you only have to take $150,000. That's a $350,000 add back. That's easy. It's easily documented. Collect the W-2. We have to document add backs. That's why when you see meals for $28,000, we're not going to document $28,000 worth of lunches, right? And so that I like those big. I like that the owner that took a big salary. Great. That's easy to document. It's easy to add back. And so those type of things are easy. It's the smaller nickel and dime add backs, right?
Got it.
And then you got to think every business owner is going to write off their cell phone. They're going to write off their own vehicles. Again, if the owner had a luxury vehicle that was, $2,000 a month, could we collect a statement showing that and be like, yeah, this is clearly not business related? We can go down that road. But again, the more you're stretching to make it work, the more you're having to go that route. Again, everything else has got to be strong, right? It can't be that on top of declining trends, on top of lack of management experience. Like, you kind of want to see what the core business is doing and then trying to make it work with that.
Absolutely. And Glenn, do you find that the projections of the future business operations, that the cash flow is actually going to be better because they're not going to be necessarily running all of the different expenses that the current owner does? And if so, is it like 15, 20, 30%? Or are you seeing some really big moves when it comes to running a lot more lean in the future?
Yeah, projections are guesses, right? And it's very rare that projections show the business is going to fail. I will say this, because we do ask for projections because we want you to put some thought, and then we want you to go put down some assumptions, like why are you tweaking this number and that number? So to me, it's easy to show projections that show increased profitability because your assumptions are going to be you're not going to run all that stuff through the business, right? And so from that standpoint, it's easy to justify, hey, actually, the profit margin's only been 18%, but I feel like in year one, it'll jump up to 24%. And here's why, because I'm not going to run all the personal stuff through there. So definitely that's where the personal add backs can come into play in terms of why it's going to benefit from a projection standpoint.
And as far as the actual experience, like for instance, if a company, let's say that they're a roofer, but they want to do a HVAC company just because of the crossover on the customers. Is that enough experience if it's a home services, or are you really wanting to see specific niche related experience?
Again, every deal is unique, right? I mean, part of it is, working to put together a management plan, right? And a lot of it also has to do with who the current staff of the business is. How long have their managers been there? What kind of crew do they have? If you're not going to have direct industry experience, have you managed books before? Have you run a team of people? It kind of comes down to, it kind of comes down to selling at that point. You're kind of selling yourself. I can help bring that story out of you, but ultimately you need to be able to provide that story so that a credit person will like it.
Absolutely.
Sorry, just got to. All right, we're good.
Yeah, absolutely.
All right, we kind of talked about this in the projections, right? So one thing that we want is some sort of business plan, projections, assumptions. Tell your story. That goes back to management. Why are you going to be successful? The transferable skills. We're going to look at revenue. Confirm all the licenses. Geographic. Why it makes sense for you. People that want to buy businesses 3 hours away. That's an eligibility issue. Not going to work. You have to make sure that it makes sense based on your geographical location. Talk about the customers. Make sure there's no concentration issues. The cash flow cycle, right? Working capital is huge. We can build in working capital in these SBA loans. We want to make sure we give you enough so that you don't buy this business and you're worried 2 weeks later about making payroll. That's part of the kind of the calculations that I do is say, hey, we need to make sure we can give you enough working capital, that there's enough cash flow that we can give you at least 2 to 3 months of working capital and this deal still works. If we can make this deal work, but it's with very little working capital because the loan amount is too high, that's not a deal we're going to like. So that's super important. And of course, unless you have a lot of personal liquidity, I mean, if you got $1 million in the bank, maybe you don't need us for that working capital. You can put in more of your own money. But if your personal liquidity is tight, we got to make sure that we give you plenty of cash so that if you're waiting on some revenue to come in, it's not going to hamstring you, within the first couple months. So these are all just kind of super important things to just keep in mind.
Excellent. As far as the equity partner, so somebody that's looking to, put in their injection, they want to learn the business, kind of get a front row seat. What are some of the things that if you were that investor that's putting in the 10%, what kind of things are you going to be looking at? Like with your experience, what kind of things are going to be kind of like, okay, this is a green flag, I like seeing this, as opposed to the red flags if you're not the owner operator, but looking to be a minority partner?
Yeah. So, I always like to get a brief bio, what's your background? Because usually private equity, they do have some business savviness to them. So it's always good. What are we going to ask for? Obviously, we need to know their name. Just from a eligibility standpoint, they obviously have to have U.S. citizenship. We do have to have a brokerage statement showing where the funds are coming from. So you're going to have to provide kind of where the money is coming from. And then do you have an expertise? Even though you're not going to be a guarantor on the loan, you might have a background that's going to allow you to help from a consulting capacity. So those are all things that we're going to want to.
Got it. Excellent. And as far as the business itself, what would you say some of the things that you would look for investing in a business?
Strong cash flow, strong trends. Business has been around, has survived a few of the economic cycles. It was around in the 2008 housing crisis. Did it survive COVID? Good management team in place. If you're going to be investing, my owner operator is going to be super important, right? I want somebody who has direct industry experience. I want to limit my risk by bringing somebody on board who doesn't have a ton of knowledge in this industry. And maybe some seller, is a seller willing to participate in the financing? Maybe get a seller's note. That way you have a seller that has a vested interest in the success of the business. Kind of going back to those red flags thing, right? Make sure not too much customer concentration. This is a great program for an investor who partners with the right owner operator, right? Because you're buying a strong cash flowing business. You can see the numbers. So you're not guessing. You're buying it based on today's valuation, which means opportunity for growth, means opportunity to make money in the future when you go to potentially exit the business. And so you can really hedge your risk by kind of making sure of those things, right? Strong business, strong owner operator, strong historical track record, good industry, good market. Those are the type of things that'll help make it a successful partnership.
Great thoughts. When it comes to default rate, like, no one's perfect. Sometimes things happen. Sometimes there's black swan events. What do you see as far as the few times, like, and what kind of percent are you that you have on the default rate? How, for every 100 loans that you're making, how many of them do have defaults or have challenges that come about with it? And what do you guys do? You've been doing this since 2008. Like, you've seen a ton of deals. You probably can get the old sniff test and have a very good idea of what's a deal that's going to really make sense, not just for the purchase, but for the long term. Can you kind of share a little bit more about that?
Yeah, I saw actually somebody posted something the other day that showed some of the SBA 7A default rates. And funny enough, default rates are higher for smaller loans. 500,000 and below have higher default rates than kind of your multi-million-dollar ones. Because obviously the sophistication of buying a more established business, of usually more established, owner operators and buyer groups, right? But even on the higher loan, I mean, the default rate is in that like 3% range, right? So it's not, with that, for an SBA loan where there's very little collateral, why this program is popular is because if you do it responsibly, if you're finding a good buying group, if you're really analyzing the selling business, and that's what I kind of tell people, right? You're going to analyze the business as a potential buyer. We're going to analyze it as a bank. We're going to put it through the ringer to make sure it's a healthy, strong business. And so you'd like to think that pass all the tests, that is indeed a good deal. Now things happen, unforeseen things happen. And so not every deal ends up being, a deal without issue. But for the most part, the rates would suggest that, that 3 to 4% default rate's not that bad.
Absolutely. What would you say, and again, you probably don't have the specific numbers on this, but what would you say for every 20 deals that are sent to you, how many of those are you given the green light on? And how many of those would you say that either because of the business challenges or the borrower, the lead investor, general partner challenges, what would you say the ones that get the stamp, at least get the first part, the term sheet?
Yeah, it's a great question. I mean, I look at deals all day, right? I'm not submitting deals all day. I'd say for every 10 deals I look at, maybe one ends up going through, something like that. And it's for all the reasons, right? The business doesn't show it supports the debt. Maybe it's priced too high and you have to change up the structure for it to work. Maybe there's trends. That's a big one. Declining revenue trends. Maybe the buyer likes the deal. Maybe I like the deal, but the broker, seller ends up choosing somebody else. That happens, right? Or the buyer is not a good fit to buy the business. There's just too many issues there with the buyer that doesn't make it work. So, kind of things have to line up really nice. I mean, you're kind of talking about the business has to be strong, the right buyer, and then the seller has to agree to sell it to the buyer. So I'd say like 1 in 10, excuse me. All right. So a couple things, and I kind of touched on this, YT Bank, we move pretty quick, right? So we can get you term sheets pretty quickly. We like the deal after initial package review, get you a term sheet. That way you can start negotiating. Preferred SBA lender. We have the ability to approve our deals. We don't have to go to the SBA. We can get those approvals in-house. I kind of mentioned about the underwriter, right? Buyer can talk directly with the underwriter. I think that's invaluable because you're able to hear directly from the person, kind of the why. Sub $2 million deals, we can get those approved without a full kind of committee review. And then over 2 million, we present in front of credit committee. But it's still the same look at under 2 million, right? We don't just automatically apply additional rules and criteria because the loan is now over $2 million. So really good process here. We can really get good feedback up front. Usually by the time we get to committee, the chance of success is pretty high because by that point, I've liked the deal. There's a pre-qual review that has also been greenlit. The underwriter likes the deal. And now it's just kind of officially going in front of a committee and making sure that there's no major issues that a committee member doesn't like. And then there's contact information. So obviously I'm there at the bottom. You can see my email address. So if I can ever help with anybody or just want to talk about anything we discussed, I'm happy to do it.
Beautiful. Yeah. Thanks for sharing everything that you did, Glenn. One of the things I wanted to ask, so as you know, what we're really looking to do is match make folks that want to get involved in a business. Maybe they're not ready to purchase it yet or sign their name on it and be in charge of operations, but they want to get their feet wet. They want to get the front row seat of learning how this business goes. Somebody that eventually they would like to, take it on themselves and really lead it up. But right at the moment, they're just not ready to do that yet. Maybe they have a full-time job. Maybe they don't have relevant experience. What would you say to these type of folks that they want to get involved? What kind of special advice do you have to that person that they're looking to do it? They're looking to you as well as other lenders out there that are really going to, put the fine tooth comb of the business. A lot of them, they're not going to have the experience. They're not going to have the knowledge themselves to really like, what is a good deal? What is not a good deal? So a lot of that, that trust is in somebody like yourself, right? So what would you say to that individual that's looking to take that first step?
Yeah. Well, make sure you clean up your personal profile, right? Make sure you clean up your personal financial situation. Get your savings together. Try not to make any major, if you are considering buying a business, make sure you're preserving your cash, right? You're not taking on too much new debt because all these things factor into it. And then kind of understanding your budget, right? Because obviously you either going to have to potentially put the 10% down yourself. And again, that's 10% of a total project cost. So if the business for sale for $1 million, you're not putting down 100,000. You're putting down that $1 million. Let's say we give you 100,000 working capital, and then there's obviously the SBA fee and then the due diligence fees. That's going to be more like $110,000 or $120,000 down payment, right? So kind of understanding your budget. Doesn't hurt to go on some of these biz buy sell websites. Check out your local, your trans world websites. See what's out there. Start getting a sense of what certain industries are being priced at, what businesses are for sale. And maybe even just go through a couple of, asking for a business listing, or we call them a SIM, kind of get the packet, just kind of start reading through and kind of getting comfortable with kind of how businesses are looked at, the terminology. We live at a great time where there's tons of information on things like YouTube, another plug, SBA University podcast. But, I kind of just kind of doing the research, right? Because this is a huge, I think people get excited about the idea of buying a business, but I don't think they realize just how big of a deal that is, right? I mean, you are buying a living, breathing thing that's coming with people's lives attached to it, that are relying on this business to pay their bills, right? And so, obviously I'm always happy to educate, but educate yourself so that when you start this process, you know exactly what you're getting into. And so all those things are obviously really important.
Absolutely. And so that's for somebody that's looking to work with you to sign their name on the loan. What would you say to somebody that they're not ready to do that yet? They're looking just to be a limited partner, to be a minority partner in a deal. What would you say to that person who's looking to kind of take that first step, not the full path? What would you say to that individual?
Yeah, I mean, obviously, I would say something is very similar, right? You're about to invest your money, like truly understand, the program that's going to allow you to invest your money so that the other person can buy it, right? To me, it's all about finding that right owner operator. If I'm investing my money, I want to find that person that's been doing this business for a while, that potentially is going to not only be able to take over but grow that thing, right? They've got a track record of being successful. Sometimes, business becomes for sale and there's an employee there that just doesn't have the resources to put the 10% down, right? If you find a business that you really like and it's in your area and you're in it, you want to be more of a passive investor in it, would it hurt to reach out to that broker and say, hey, by any chance, I'm interested in buying this business. I don't have the experience. Is there a current employee, a longtime employee that potentially could step in and run the day-to-day operations, right? Just kind of partnering with somebody. You want to lower your risk by finding kind of the right buyer for that person. And so, that would be my advice. Again, just kind of seeing what's around, seeing the price points, kind of, again, what's your budget? You're putting money in. And then one thing to keep in mind is the SBA does not want that buyer to start making payments back to you on your investment, right? You can't give somebody 200 grand and say, okay, I want 10,000 a month for the next, whatever years, right? That technically has to be on, just like a seller note that's used for that equity injection. Your investment is an equity injection as well. So to be eligible, it has to be on standby for 10 years. So understand that you're coming in as an investment partner. Obviously you can take out, just like with any owner, you can take out money through distributions and things like that, but they can't repay on that equity investment. And so, again, figure out your budget and then just find the right partner. And then obviously the due diligence will come after.
That's great. Awesome. Great feedback on that, Glenn. Any other thoughts in general when it comes to using the 7A program and working with somebody like yourself?
Yeah, it's a popular program right now. There's a lot of people looking to buy businesses. You can strategically put yourself in a place where if a broker gets your email, that you can have the best chance of success, right? If I'm a broker and somebody reaches out to me and says, hey, I know this space, I know this industry, I've got a financial, backing partner, I've talked to a bank, they've pre-qualified me, that's going to put you at the front line. If you don't really have a good plan up front, you're going to be just one of 50 emails that just don't have much meat to it, right? And you'll probably be ignored. But there's great opportunities out there. There's a lot of baby boomers that are retiring to buy a great cash flowing business that maybe just needs to be modernized a little bit. Not only that, you can buy a business, then in the future, you can buy your competitor, you can expand, you can grow your geographic region. All these things can be utilized with the SBA loan. But no, it's exciting times right now. If you find a great deal, obviously the rewards to that in the future are unlimited.
Well said. Excellent. Well, for everyone that has watched this, hopefully got some great input from the perspective of Glenn, and this helps you on your path, on your journey to being involved in a boring but beautiful business. Glenn, again, thanks for everything that you shared. And for anyone else that is interested in talking more to Glenn, you have his info on the screen. And if you are interested in talking more about how you can get involved in our matchmaking program, go ahead and reach out to me on that, and we'll take it from there. Until next time, take care.
Thanks.